Hi, this is Mac with PriceActionTradingSystem.com, and this is Monday, May the 14th. Hope you had a good trading day today. It was a little tricky. It was really kind of a choppy range day, and obviously if you got the trend lines right, then it wasn't quite as difficult. But I've got a couple of emails a day from people saying they had a hard time, and I can understand why, because there was no long-term clear-cut trend, and prices were just really stuck in a range. It ranged from about 1334 for the lows up to around 1344 for the highs, so about a 10-point range. But really, prices spent most of the day in a range from about 34 to about 40, 41 area. So it's not a very big range, and prices really spent the biggest part of the morning trending down uh, into about a little after the first hour, right around the first hour. Then it reversed and it trended up the rest of the day, and then we had a trend line break and a reversal. So if you're drawing your trend lines, it shouldn't have been quite as hard. And but then again, even finding this trend line here, if you might have drawn it right up through here, even if you did, you still should have found this. I'll show you that when we get to it. But um, I will say too, if you couldn't find our chart lesson from Friday, that's because there wasn't one, and I apologize. My intentions were to do one early on Friday morning. I had some things going on, or I'm sorry, early Saturday morning. I had some things going on Friday afternoon, and my intentions were to do one early Saturday morning, but at the same time I'd forgotten that I was going to be going out of town, and I was on the way out of town when I remembered that I didn't do the chart lesson, and so just wasn't any way to do one, and I didn't really have a good way to update everybody by email either. So if you couldn't find it, that's why there wasn't one. So normally I'll try to make you aware when I'm not going to do one, but it was just one of those weekends where I just wasn't thinking ahead. And but anyway, we'll get back on track this week. Let's talk about the trades, and I'll talk about the trend lines here, and we'll go from there. But just to show you real quickly, this is the big picture. I only marked about 6 or 7 of the trades here. Let me show you this though. You could have, you probably started off with your trend line right there, and that's great because we did have a trend line break. And if you measured these two legs, you'll probably see that it's, I didn't measure them, but I guarantee they're real close. There's leg 1, I would say, and then there's leg 2, and you can see that's a nice little two-legged correction. We really went into this trading range, but you got a couple of legs down, and they're real close there. And so that's so even if I didn't have that on there, but I wanted to show you that in case a lot of times I'll draw the trend line and I'll leave off something like that right there. But this trend was pretty much out of play almost. This one here by the time the market opened, so that's the reason I don't have it on there. And on this trend over here, let me just talk about that real quick before I forget. You might have drawn your trend line like so, and if you did, it doesn't matter. You still had your break, your move to a new high, then a two-legged correction, and then a new trend. And so either way you did this, you still should have came to the same conclusion. You should have been looking for, and if you drew this trend, that probably, what you should have, because it is a short-term trend, that probably should have got you to thinking a correction here anyway. But as you notice, I didn't draw any shorts. There was actually a short up here. I didn't put those on there because you really would have been counter trend trading, because this was a fairly good move up off of these lows. And there's your first leg up, and then your correction, and then there's your second leg, and you can see it's almost a perfect measured move again. So just remember to try to measure these legs, and then you got a two-legged correction right here on a bigger picture, and there's leg 1, and then you drag it over here, and there's leg 2. I didn't actually draw that exactly right, but there's leg 1, there's leg 2, and you can see how close that was. So that's a two-legged correction, but I believe this was the trend line. And if you use these first couple of bars right here, you probably could have found that a little easier. But a lot of times what I'll do is I'll draw a trend line off the top, and I drew it off these first couple of swings right here like so, and then I copied it and drug it down. And if you do that, you see that fits perfectly. So always be looking to compare your trend lines and move them around and make sure they fit on both sides. That's the same thing here. If you had this trend line and you drew it and copied it and drug it down here, you know where to look for the reversals all day. And that's all that is. And that's how I got this line down here. I copied it from up here and drug it down, and you see it's a perfect match. And that's where I knew to look for the reversals at each time. So if you're good enough at it, you can be trading off these reversals down here. I don't mark those because I don't want to be anybody that's learning to be trying to do that, because you don't want to counter trend trade if you're just learning to trade, because all you're going to do is give your money away. And but let's talk about the trades real quick. We're already 6 minutes into this, and I'm trying to whittle these videos down to where they're only about 10 minutes every day, but I just can't seem to do it. So but let's talk about each of the trades. Here's your first setup right after the open this morning, and it's right off of this trend line if you'd had that drawn across there. And you got a nice doji here, and if you look, it's a two-legged move. There's a move up, a pull back, and another move up, and then nothing. Notice how nothing could close up above that line. And going short below that doji is a good trade, and if you didn't go short there, you could have gone short here. This was the safer trade because it's up here where all these highs are. Even if you didn't have that trend line right there, you still should have had this trade. Look at that right there. It's a nice failed break. It's a triple top, really. It's a failed break above those closes, and it's a small doji at a strong resistance area. So even if you didn't have your trend line, you still should have found that trade, and that's a great setup. And the entry was one tick below this bar. This is your signal bar, and your stop goes just above it. And I've had another trader that says they can't tell where I'm entering. And generally I center the signal bar, and I talk about the signal bar, and the signal bar is generally a trend bar in our direction, like that one right there. And but I'll try to point out the signal bar so you know where the entry is, and it's always one tick above or below. If we're going long, it's one tick above the signal bar, and if we're going short, like right here, it's one tick below the signal bar. So it should be fairly clear cut. And but I'll try to point out the signal bar just so that people know. And it's too much trouble to go make a little, it just takes a bunch of extra time to go draw that little line I used to draw. So I'll point it out. It's easier to do that and quicker. But that was your first short, and that was a nice, easy trade. Any runners were easily safe and worth several points, and you would have known to probably exit right down here off that trend line if you'd have copied it and drug it down. So that was a perfect exit, and you could have actually even gone long right there, like I said, because you're coming off this low with expectations that we're going back to the highs. And so there was your chance to go long right here if you were good enough to see that and had your channel in place. And all this is a channel. And so that's a great short. But here's another great short right here, another two-legged move, and you got a huge bearish bar right off that trend line. So going short right there. And it took it a minute to work on through, but again, it did, and it was an easy trade. Probably no runners on that one, unfortunately, because we did have our bigger trend line break and a couple of legs down to a new move. So it wasn't clear if prices were going to make a new low, but it was, the odds are you're going to come back down here and try to test this low, because usually once you get your final push to a new low, you'll test that one more time, just like you did here. This was the final push. We tested it one more time and then rocketed out of there. So just remember that. Always wait for the second attempt to do things most of the time, and you're going to be better off. And so this was a great setup right here. Probably no runners, but that's okay. And there was actually a short right here. This is a two-legged pull back to the EMA. You've got a failed break above these highs right across here. So this is a long trap. But by the time you got a chance to go short, there were 1, 2, 3, 4, 5, 6, 7 overlapping bars. 2 of them were dojis. We'd already had a new low. We'd just come off the low end. So this was a really risky trade. It worked out, but I didn't mark it because it was risky. But it does meet our trade criteria. So if you took it, it was okay. And this trade does generate more winning trades than anything. And when I say this trade, I'm talking about a two-legged pullback to the EMA or the trend line in a trending market. And this market, even though it's choppy, it's trending down the whole way. And that's pretty obvious here. We're making lower highs and lower lows. So we're trending lower. And so that's, you know, if you took that trade, nothing wrong with it. I was hesitant to mark this one as well, but when we set up this double bottom right here after we'd already come off the low, the odds were really high we were going back up here to test this high because we just come off this low. And when we made this double bottom after 2 legs down to a new low, then the odds were with us that we were probably going back to the higher side, and there was strong support across here. You can see prices could never, at first they couldn't close below here, but then right here they couldn't go any lower than that, and then eventually they couldn't even close below where they closed before. So it tells you the buyers are starting to get stronger. But if you didn't take it because of the overlapping bars, that's probably a good thing, because there's a good chance this could have broke up here and failed and come back down and tested it again. But if you did see this trade and you took it, nothing wrong with it, because we did test this low twice. We tested it right here, tried to go higher, we came back and tested it again, tried to go higher and came back and tested it a third time. Still couldn't go any lower, and so going long right there was okay, and that was a nice move. And because of this strong move off this double bottom after a trend line break and 2 legs down to a new low, there was it was really risky thinking going short right here. So if you did get trapped in this, when prices came back again a couple of different times, it was wise to get out, because this is a very bullish move right here off a double bottom when you're expecting a reversal anyway. So that made this a risky entry, and you can see if you would have entered there, you would have gotten trapped, and it would have stopped you out right here if you were using your 2-point stops. So, but the next entry was a long right here. This is a perfect 2-legged pullback to the EMA, and so you could have gone long here. And if you didn't go long here, you definitely should have gone long over here. And you can see by going long here, you had to keep your stop below the signal bar, which was this green bullish bar right here. There's your signal bar, and so your entry stop would have been right here. And it got a little dicey because it came back, and that's what it'll do sometimes. But you can see it made a higher low and then reversed. And when it did that, you definitely should have entered right here. And you can see that move. We had the shorts trapped now, and look at that explosion up. And there's a nice 2-legged move up to a brand new high right there. And so there was actually a short in here, but again, I don't mark those because you'd be counter trend trading, and you never know when this thing's going to reverse and go another leg higher, because the trend is now up. So I usually just try to stay away from the counter trend trades unless it's a reversal, and this is where you would expect a reversal, but we did not have a trend line break off of this yet. This was the first real trend line break right here, and then we got a second leg down. This is the first leg, your little correction, then the second leg, and then it was off to a new high. And look what happened after we made a new high. Then prices are coming down. So again, there was an entry either here or here, and by the time it got to here, if you didn't enter, it was really risky entering anywhere over here, and because by that time we had all these overlapping bars. But when it came off of this right here, I actually entered here, and you can see by keeping my stop down here below this signal bar, which is right here, I was safe, and that's where you want to be. And if prices did go lower than that, that wasn't a good sign, and you'd want to be exiting out of that trade. And so there was an entry here or here, excuse me, but anything after that you would not want to be entering. And you can see it didn't go very high before it sold off and came down here and ran the stops and then went higher. But this is a great setup right here, because now you got trap shorts and you've got your second leg in place. Here's your first one, there's your second one, and this is really, you had your bottom all the way across here. This is kind of a triple bottom. This is a failed break below a double bottom, so you got a lot of trap shorts right there. So going long just above this bar right here was a good trade, and you can see how it rocketed off to the new high after this trend line break, and then the sell-off was in place. So that was pretty much it for today. Hopefully you see all those trades. If you struggled today, you weren't alone, because I got at least 2 emails today talking about how people were struggling. And that brings me something I want to remind you of. If it seems like I'm getting a little slower answering the emails, I'm really starting to get bogged down with a lot of questions. We've got so many people that are interested in price action trading now, and over the months there's more and more interest is being generated in it, so I'm getting a lot more emails than I used to, and I'm really even getting a lot of questions on YouTube itself. So I would encourage you to send something to me directly, because it'll take me even longer to respond directly to YouTube, although I do get a notice that somebody left a question or a comment, and I'll usually go look at it and to see if it's a question that needs answering, and I'll try to answer it. But I'm really starting to get a lot of emails, and it's almost becoming distracting. And I'm not complaining. Don't take this the wrong way. But what I will say is that I'm probably going to try to answer the emails from people that have actually purchased our course, our manual. It's $100, and I don't plug our course very often, but I'll plug it today. Just simply because I'm going to have to come up with some way to weed through the emails. I mean, I will probably answer them all, but if you bought one of our courses, I'll usually answer you within 24 hours. And if you didn't buy one of our courses, still feel free to ask me any questions you like, because this is not really about the money. It's more about something I enjoy doing, so I'm doing it. But if you didn't buy the course, it may take me longer to answer your question. That's the way I'll leave it. And so hopefully you understand. I've got to find some way to kind of prioritize our emails, because it's really becoming much bigger than I ever expected. And that's good, because this is, I really want people to understand this is the way to trade. And I don't make my money teaching. I make my money trading. I'm a full-time trader, and the money is in the trading. It's not in the teaching. So, even though we make a little money, I don't feel like I make near what I should for what I put into this. It's mostly I do it because I enjoy it, not for the money. And like I said, the money is in the trading. So, if you can learn this, and you can learn this skill, it's transferable to any market, any time frame, and you'll have a skill that nobody can ever take away from you. And you can use it in times like this that some people need this, and I get people that contact me that are desperate, and I hate for people to trade because they're desperate, because it makes it a lot harder to be successful. But at the same time, if you can learn this, and you've got a skill that you can always use to support yourself or your family or your loved ones or whoever, and you can support them well, and nobody can take that away from you. This is like trading price action. Basically will teach you to read a chart, and nobody can. It's like riding a bicycle. Once you learn how, you don't forget. You become very good at it. You may get rusty, and you may need to if you laid off for a while, you'd probably have to come back and practice some and kind of get your skills back. Even riding a bicycle, I haven't ridden one in years, but if I got, one time I could probably do backflips on one, but probably can't do that now. I'd break my neck. But I probably could get on it and get to riding it again and get to where I could do a lot more with the bike than I could. Hopefully that analogy, I always use analogies when I'm trying to teach, because it helps people understand what I'm saying, and sometimes they're corny, but they're usually effective. And riding a bicycle is one I think about. You won't ever forget how to learn how to ride a bicycle. And you won't ever forget how to learn how to trade if you learn how to read a price chart. And nobody can take that away from you. And the markets can change and whatever, but that price action rules will never change, and learning how to read a chart will never change. And it works in any market, on any time frame. Anything that's chartable, you can learn, you can trade price action with. And that I know for a fact, because I've done it. And the ES is my market of choice, and I do believe that you should find the market that you like and become an expert at it. Don't try to trade. I mean, I've done it, and I used to do it, and but I don't do that anymore. I used to like to trade the euro a lot, because you do get some big moves in euro and oil and some of these other markets, but those big moves can hurt you just as easily as they can help you. So there's not really advantage in the long run. In my opinion, find one market. If it's oil, that's great. If it's the euro, that's great. If it's the ES, that's great. But trade that market and become an expert at that market, because every market has its own personality, and every market is slightly different. So find the market of your choice and become an expert at it, and learn how to read a chart, and I promise you, you will have a skill and a way to make a living that nobody can ever take away from you. So it won't come overnight. It's not, for some people it's easier than others. But if you ever learn it and you ever get good at that market, you're on your way. So I'm gonna leave it at that. We're 20 minutes here, and I was gonna shoot for 10, and never can do it. But this is Mac with PriceActionTradingSystem.com, and we'll see you next time.